Lovisha, Darad and my colleague Yatin, Mota. It has been a great start to the week after we saw bloodbath last week. We saw the likes of Sensex and Nifty snap their 5-day low losing streak and ended up by 7/10% of higher. Sensex especially ended with nearly 500 points gain, while Nifty ended above that 23,750 mark. So the next resistance that can be eyed out for could be this 23,800 mark. But the overall breadth was positive thanks to three major factors. We had a strong global handover, be it the Asia Pacific markets or the US markets last Friday. Also, both of them closed on a positive territory. European markets, however, they opened tad bit in the red. That's why we saw a bit of a slump in the second half of the session, but strong attempts to recovery was seen in the last 1 hour as well. But the second factor that boosted the markets were the financial stocks and of course the index heavyweight, that was your Reliance Industries, that contributed to the index upside as well. If you look at majority of the sectors that fared well except your Nifty Auto index that declined in the trade as well. India Wix, the volatility index, that cooled off by 9% in today's trading session as well. But Yatin, today, Macquarie spoke to CNBC TV18 and said that they expect 10% fall for India in the first half of 2025 because markets will be adjusting to the Trump presidency as well. Even there were certain reports suggesting that global funds are slowly shifting towards the US equities from EMs that have come in limelight. So could this just be like a dead cat bounce just before this Christmas week that we are seeing right now?
I think the important points again for the markets will be the Q3 earnings. Obviously, as you're mentioning that the US election outcome, that comes into effect in January, wherein Trump takes office of the president of the US. Most importantly, on 1st Feb, we have the union budget as well. So these are the two big events that the markets will be watching out for. Obviously, apart from the earnings season, these are the two large events wherein a lot of global interest also will be there. Because given the fact that Trump has a majority in both the houses in the US, what kind of reforms does he plan to bring, what kind of geopolitical outcomes does he have in the first 2 months of office will be also watched out for. And obviously back home we have the union budget which can have a lot of surprises on the positive side, especially with respect to the government spending on infra projects as well as private capex and the public capex figures which are still lagging. So yes, valuation wise a lot of brokerages are not comfortable. Macquarie is being slightly more cautious on the Indian markets, but I think whole host of other brokerages are still positive on Indian equities. Limited upside, but we don't see a big downside when it comes to domestic brokerages in the general perspective till now. But yes, as I mentioned, the earnings along with the Trump as well as the FM statements moving ahead will be important to watch out for.
That's right. As you mentioned, budget, of course, it's going to be a working Saturday for us. It's on 1st of February, as mentioned. But let's quickly take a look at the top gainers and losers at this point. JSW Steel, Hindalco, most of the, metal stocks have grabbed the limelight in today's trading session, up about, 2% in today's trade. Apart from that, ITC, ahead of its demerger of the hotel business effective on January 1st, it is also doing well, up about 2% in today's trade. IndusInd Bank, despite the RBI's penalty, that did well and it ended up with about 1% gains in today's trading session as well. If you look at some of the top losers on the Nifty 50, that include the likes of the auto stocks after, of course, the GST Council hiked the taxation on the resale value of the old cars to 18%. So that of course, the slowing consumption patterns that is prevalent in the auto sector, that also saw a bit of a hit, and we saw the likes of Hero MotoCorp and Maruti Suzuki end with about 2% declines as well. Nestle, HCL Tech, Bajaj Finserv, all of them dominating on the Nifty 50 losers end of the markets as well. But mid-cap and small-cap indices, they underperformed the benchmarks. Mid-cap was flat in the trade. However, the small-cap index cracked a fairly bit higher than the mid-cap index. Yatin, what do you make from the broader end of the markets?
So if you look at the overall broader market continues to struggle. In fact, the small-cap index was marginally lower in trade today despite the Nifty moving by 165 points. Mid-cap index almost 200 points higher, but we had the intraday swing coming in, and probably that is the reason why the market's advance decline ratio was almost 2:3. So we had the markets which are up, but the advance decline ratio clearly indicating that there is a lot of profit taking in mid-cap and small-cap stocks. Among the gainers, we had stocks like India Cements, and after the CCI approval for UltraTech Cement to acquire a majority stake in India Cement. That stock shot up 8%. Amber Enterprises, Intellect Design and Adani Wilmar were the other stocks which moved anywhere between 5 to 10%. What did not do well is DOMS. There was this block deal post which the stock has seen some bit of selling pressure, down 10% in trade today. New India Assurance, after no discussion really was made for medical insurance GST reduction, that saw some disappointment and profit taking, 5% down for that stock. Kirloskar Brothers and KPR Mill were the others which we know were losing in trade. But stocks like Coromandel International as well as Mankind Pharma, both these stocks did well, hitting fresh 52-week highs in trade.
That's right. As Yatin, you pointed out about India Cements, that did well in today's trading session. Well, let's discuss more about it, because it jumped about 11% in today's trading session after CCI's approval of UltraTech Cement's primary acquisition and open offer for acquiring about 32% equity stake in the company. Meanwhile, shares of UltraTech Cement, that also rallied over 1%, which was the day's high of today. Now, UltraTech's board had previously approved the acquisition of about 10 crore shares of the India Cements from the promoters and other shareholders, which was the primary acquisition. But now the company has made an open offer to acquire another 8 crore shares of the company at about 390 rupees per share from the public shareholders. What they mean by this consolidation of the two companies are expected to further improve the price discipline, generate better profitability and of course the return ratios in the long term. It is also expected to boost its position in the southern states and meet its production target of 183 million metric tons by FY27. Yet then after Adani Group's entry in the Indian cement space, UltraTech too has ramped up acquisitions of smaller entities. But even if you look at the November price trends, that had indicated muted demand for the cement bags. Maybe the second half could pick up pace because the government spending is expected to improve from here on.
Yeah. Absolutely, you hit the nail on the head. Most importantly, if you look at the private capex and the public capex, it was lagging in the first half, typically because of extended monsoon also. And post this monsoon season, we are expecting that the cement demand would improve because a lot of construction activity, housing activity pickups, during the festive season, post the festive season. What we are gathering is that December's price hike was there. But brokerages are expecting that the price trends will improve. As you are rightly mentioning that UltraTech Cement has probably upped the M&A game in the cement sector after Adani has also aggressive expansion plans. So probably there are a few smaller cement players which would like to consolidate, and the larger players, be it the Adani Group or be it the Birla Group, they would want to have a pie of these small sellouts. India Cement being a prime example, wherein UltraTech has probably outbid the Adani Group to acquire and getting the CCI approval well before time, and that is the reason why we are seeing the excitement in the share of India Cement and UltraTech both in today's trading session.
That's right. Let's move on to another metal stocks which grabbed the limelight and of course dominated the Nifty 50 gainers list as well. We saw the likes of Tata Steel, JSW Steel, Hindalco, which saw a strong rally after Directorate General of Trade and Remedies, which is the DGTR. They initiated an investigation into the steel industry's request for 25% safeguard duty on steel imports. Now, this investigation has come after Indian Steel Association complained about rising imports of steel and have requested for imposing a safeguard duty. This investigation will also assess whether there is an unexpected surge in the steel imports and whether such imports have posed a serious threat to the domestic steel industry of India as well. Now, the period of scrutiny that will cover the imports will be from October 2023 to September 2024. The authority will also be reviewing the data from 2021 to 2024. So, this safeguard duty is going to be just a temporary tax which will protect the domestic industries from a sharp rise in imports. So, a protectionist measure which is coming in. So, now after this investigation, the DGTR will go to the board of safeguard with a plan whether or not to impose this safeguard duty, and the final decision will rest with the finance ministry to go ahead whether or not they want to go ahead with it. So, a developing news coming on that front, and of course steel stocks seem to rejoice it. Yatin, definitely a relief for the steel companies because it's going to help limit decline in the steel prices and protect the company's margins as well going ahead.
Absolutely, and much required, for the domestic industry, because they've done various representations, and now I think the government agency is also acting on the information provided by the Indian Steel Association. As you're mentioning, if there is a safeguard duty of 25-35%, in the base case, that would probably help cement and steel companies, beg your pardon, to better their margins and realizations. On the other hand, keeping the domestic industry utilization also at better or optimum levels. Siemens, that is one stock which we need to focus on. Friday, the stock plunged nearly 10% after the analyst meet, and today also a couple of brokerages were slightly skeptical about the company's growth plans ahead. In fact, today Nuvama has downgraded the stock to hold, and they have cut the target price to 7,000 from the earlier level of 7,350. A lot of brokerages have exited the target price given the fact that the company has been going slow on Indian Railways orders. In fact, the HVDC orders also are something which the markets were expecting the company to be quite aggressive, but they have said in the meet that they won't be focusing on this particular segment. Also, if you look at the railway locomotive orders, train set orders, they are also quite slow versus the expectations. Obviously, it is quite evident that in the first half government did not have that kind of capex push. Probably in the second half we would expect some bit of pickup, exactly what the company said. Also, if you look at the smart infrastructure and digital infrastructure capex, that is also slightly lackluster, but the management is expecting that from the coming quarters there could be a pickup in overall ordering. But clearly after the management comments, we saw the stock not only correct on Friday's trading session, but today also was lower by nearly 1 percentage point.
That's right. Let's move to another stock in focus, that is your Indigo shares. That was flying in today's trading session after Elara Capital has upgraded its rating on the counter. They've upgraded the rating to counter to buy, and they have hiked the target price to 5,309 rupees per share. Now, Elara Capital, they believe that the expansion at major airports of Indigo will be driving growth for the company as well. And it also believes that large orders will be driving attention going ahead. The Pratt and Whitney fleet, which is also expected to return from the fourth quarter onwards from this fiscal, which will give the airline an additional edge for going ahead as well. Apart from that, the international traffic, which accounted for about 20% of last year's traffic, air traffic, is expected to grow at 12% CAGR between FY25 to 28. Now, Elara Capital has also said that the railway traffic for journeys, which is more than 12 hours, could also translate into aviation demand in the long haul. So that is an interesting bit. That means that it is provided that it continues to expand its capacity going ahead, then also that can translate into from rail to an aviation traffic as well. So quite a positive take coming in. Yatin, earlier Jefferies had also come out with its report suggesting that deliveries of new aircraft of Indigo has picked up pace while Air India has lagged behind. So looks like a strong growth runway coming in for the stock.
Absolutely, and what this will do is number one, keep competition under check. It will not allow Air India to gain market share in the short to medium term. And also, given the fact that the aircraft supply will be limited over the next few years, the ticket prices will probably become better in terms of the overall realizations for these aviation companies. Also, if you look at the focus of these companies, including Indigo, is to expand the international routes also. So the newer aircraft probably would also get deployed in the international routes, limiting the domestic supply. So overall, I think brokerages and investors do expect that moving forward, given the fact that the aircraft supply will remain under tight supply, and moving forward the realizations would improve, given the fact that airlines are too diversifying in the international skies, would benefit companies like Indigo, which are market leaders and probably will remain in that position for a couple of years from here on.
Yes, that's right. But of course, after 5 days of long, bearish trend that we saw, it is of course a green for the markets. We'll see whether or not this is sustainable going ahead as well. But with that, we have come to an end of this edition of the Closing Bell. It's a wrap from Yatin and me, but do stay tuned to moneycontrol.com for more news updates and market insights.